Imagine you start a small business today. Let's say you have a shop. In that shop, you have goods and you have cash. But here is the question: who really owns the business? Will you say it's you, or the bank, or someone else? To answer this question, we need to understand the most important formula in accounting, the accounting equation. What is the accounting equation? The accounting equation is the foundation of accounting. It shows the relationship between assets, liabilities, and capital. So the formula is assets equals liabilities plus capital. Everything in accounting comes back to this equation. Assets equals liabilities plus capital. Let's break it down by explaining each word. What are assets? Assets are things the business owns. For example, cash, building, equipment, inventory, vehicles, and so on. If the business owns it, then it is an asset. It simply means resources the business uses to make money. Let's look at what liabilities are. Liabilities are what the business owns. For example, bank loans, credit purchases, unpaid bills, and so on. If the business must pay it back, then it is a liability. It simply means money the business must pay back. Let's look at what capital is. Capital is the owner's investment in the business. It is what belongs to the owner after removing debt. Capital represents the owner's claim. So let's look at real life example. Before then, we'll look at the powerful formula again. Asset equals liability plus capital. This means everything the business owned came from either money borrowed or the owner's money. So money borrowed, which is the liabilities, plus the owner's money, which is the capital, will equal the assets, assets owned by the company. That is why it must always balance. So let's look at a real life example. Imagine Sarah starts a business. She invests $1,000 cash. Now, based on what she has invested, the business now has assets worth $1,000 cash. Liability is new because there is no money borrowed. Capital is equal to $1,000. That is the money she invested into the business. The equation will now be assets 1,000 equal new liabilities plus capital of 1,000 balances. So assets 1,000, liabilities plus capital is 1,000. So it's balanced. It's still balanced. The equation never breaks. Let's look at what if she takes a loan. Sarah takes a $500 bank loan. Now, the equation is now assets equals 1,500. That is, liabilities is now $500, capital is now $1,000. The equation is still balanced because asset is 1,005, which is the makeup of liabilities of $500 plus the capital of $1,000 equals the assets the business owns of 1,500. So it's still balanced. What if she buys equipment? She buys equipment for $300 cash. The asset is now cash 1,200, equipment $300, then the total assets equals 1,005. The liabilities equals $500, capital equals $1,000. So the cash has reduced from 1,005 to 1,002 because out of the cash of 1,005, she bought equipment for 300. So the cash in the business will reduce to 1,200. And we have the equipment as part of assets, which is $300, showing what she bought. So in all, the total assets is still 1,500. The liability side plus the capital side still remains the same because she has not yet paid back the money she borrowed, and the money she invested of 1,000 into the business is still the same. Still, 1,005 equals 500 plus 1,000. It still balances. Remember that this equation never breaks. Let's look at why this equation never breaks. Remember that every transaction affects at least two accounts. One account is debited, the other account is credited. That is why accounting is called double entry system. This keeps everything balanced. The double entry system keeps everything balanced. Now, let's see why students must understand this equation. If you understand the accounting equation, then your journal entries become easy. You will know what to debit and what to credit because the debit and the credit side must always balance. Even your financial statement that you will prepare, it will make sense. It will be easier for people to understand. Your exams become easier, and even accounting becomes logical. It will be easy for you to understand the flow. Without it, Accounting feels confusing. It is very important that you understand this equation. If you don't understand it, it becomes confusing. You will not be able to prepare financial statements. You will not even be able to calculate profits. You can't even understand your business position. So, accounting equation is the backbone of accounting. Let's look at a quick summary of what we have learned today. Accounting equation equals assets equals liability plus capital. And we said assets is what the business owns, liability are what the business owes, and capital is what belongs to the owner. It must always balance. Remember this. It must always balance. This is the rule. So, if you now understand the accounting equation better than before, make sure you subscribe to Accounting Made Simple by Etelish. Like and share on this video. Comment below which part was difficult before today. In the next video, I will explain double entry bookkeeping. Thank you for watching. See you in the next